On April 26, 2019, Exxon Mobil Corporation reported first quarter earnings for the period ending March 31, 2019. This video provides an update on the company's dividend safety using its most recent operating results. Before we begin, I invite you to subscribe to this channel and like this video, which will help more people discover SureDividend's investor education efforts. With that out of the way, let's dig into Exxon Mobil's dividend safety. To begin, let's talk about Exxon Mobil's business model. Exxon Mobil is the largest integrated oil and gas company in the United States. The company can trace its roots to Standard Oil, which was founded by John D. Rockefeller in 1870. Today, Exxon Mobil has a market capitalization of $311 billion, with annual revenues of $290 billion. Exxon Mobil is one of the world's most popular dividend growth stocks. The company's current dividend yield is nearly 4.7%. Moreover, Exxon Mobil is a consistent dividend grower. In fact, the company has increased its annual dividend payment for 37 consecutive years. Because of this, Exxon Mobil qualifies to be a member of the Dividend Aristocrats, an exclusive group of dividend stocks with more than 25 years of consecutive dividend increases. Looking ahead, investors interested in owning Exxon Mobil stock will likely be interested in the safety of the company's dividend payment. For the remainder of this video, we will discuss Exxon Mobil's dividend safety from four perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. First, let's discuss Exxon Mobil's dividend safety in the context of the company's current earnings. In the first quarter of fiscal 2019, Exxon Mobil generated adjusted earnings per share of 55 cents, which compared quite unfavorably to the $1.09 of adjusted earnings per share in the same period a year ago. For context, Exxon Mobil currently pays a quarterly dividend of 87 cents per share, which implies a payout ratio of 158% in the most recent quarter. Looking out over a longer time horizon, the company's payout ratio is much lower. Exxon Mobil generated $4.97 of adjusted earnings per share in fiscal 2018. The company distributed $3.23 of common share dividends during the same time period for a dividend payout ratio of 81% in the full fiscal year. Using earnings, Exxon Mobil's dividend appears safe for the foreseeable future, but could be at risk for a cut if this metric declines. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare Exxon Mobil's current dividend payment to its free cash flow. Exxon Mobil generated $8.3 billion of cash flow from operating activities in the first quarter of fiscal 2019 and spent $5.2 billion on capital expenditures during the same time period for free cash flow of approximately $3.1 billion. The company distributed $3.5 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 113%. Looking out over a longer time horizon, the company's payout ratio is much lower. Exxon Mobil generated $36 billion of cash flow from operating activities in fiscal 2018 and spent $19.6 billion on capital expenditures for free cash flow of $16.4 billion. The company distributed $13.8 billion of common share dividends during the same time period for a free cash flow payout ratio of 84%. Using free cash flow, our conclusion for Exxon Mobil's dividend safety is the same as when we used earnings. The company's dividend is currently covered by free cash flow, but a decline in this metric could put the dividend at risk for being cut. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. With that in mind, this section will analyze Exxon Mobil's current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by assessing its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Exxon Mobil's performance during this time period is shown here. Exxon Mobil's adjusted earnings per share declined by 45% during the last recession. The company has not made a new high in adjusted earnings per share since 2008. More importantly, though, the company's earnings still covered its dividend payment, and Exxon Mobil continued its multi-decade streak of dividend increases. Because of this, we have little concerns about the company's ability to pay rising dividends during future economic downturns. The last angle that we will use to assess Exxon Mobil's current dividend safety is by looking at the company's current debt level, which is a cause of concern for many investors. More specifically, we will see how much the company's weighted average interest rate would have to increase before its free cash flow would no longer cover its dividend payment. At the end of the first quarter of fiscal 2019, Exxon Mobil had $21.2 billion of total debt outstanding. The company generated $181 million of interest expense in its most recent quarter for a weighted average interest rate of 3.4%. Normally, We include an interest rate stress test in these analyses that shows how much ExxonMobil's weighted average interest rate would need to increase before its dividend would no longer be covered by free cash flow. Unfortunately, Exxon's dividend is already now covered by free cash flow, so we have excluded the stress test from this video. We reiterate that investors should monitor this trend closely moving forward. Thank you for watching today's video, which performed a deep dive on ExxonMobil's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover SureDividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.